Hello everyone, welcome to another episode of Insight with Oladejo. I remain Oladejo Adeyemi, your foremost business coach who designates his time to reading the tax laws so that you do not have to spend as much time doing the same. Today what are we looking at? The instance where a foreign vendor is supplying goods and or services to Nigeria. The question has always been, does that transaction or those transactions as they were, can that make that foreign vendor liable to Nigerian tax? I'll take that again. Supply of goods and services to Nigeria by a vendor who is a foreign vendor, does that automatically make that foreign vendor liable to Nigerian tax? You need to understand that there are many parts to this conversation, and we are considering this conversation today because I've always gotten the question relating to this. And the questions do come from different angles: withholding tax, value-added tax, income tax, registration obligation, and all of that. So we are not going to rush this episode. We'll just focus on one of the parts, and we will talk about the income tax bit in relation to that vendor who is a foreign vendor who typically supplies goods or services to Nigeria and who is worried about his tax obligation, its tax obligation as an entity. But to start with, who is a foreign vendor? Who is a foreign company? As far as the Nigerian taxing framework is concerned. Of course, if you are providing services or goods into Nigeria to a person or a company, and you are not resident in Nigeria, in tax, residency matters. Once you are not resident in Nigeria and you are providing goods or services to a person or a company in Nigeria, whether you yourself, you are a person or you are a company, then you can be categorized as a foreign vendor. Whether the goods you are supplying relates to whether what you're supplying relates to tangible goods or services that could include digital products or other commercial rights to customers. All of these operations can make you be categorized as foreign vendor. So the fact that a vendor merely doesn't have Nigerian subsidiary or does not maintain a Nigerian bank account or issues his invoice from outside Nigeria or receives payments in foreign currency or signs contract as a Nigeria in itself does not automatically mean that that transaction fall outside the Nigerian tax system. Let me say that again. The fact that a company does not have a Nigerian subsidiary, has issued his contract outside of Nigeria, has received his payment in foreign currency, does not maintain a bank account in Nigeria, and issued its invoice from outside Nigeria, in itself does not automatically exclude you, from the Nigeria tax system. The correct analysis would depend on a couple of things. Number one is what is being supplied. Number two is where the goods or services are used. And number three is whether the vendor has sufficient taxable connection with Nigeria. Remember that we are focusing only on the income tax aspects in this conversation. In the days to come, we'll look at the other aspects of the conversation. So with respect to the income tax aspect, the relevant section here is section 17 of the Nigeria Tax Act, and it provides that the income or profit or gain of a non-resident person accruing in or derived from Nigeria are chargeable to tax in Nigeria. However, the treatment of goods differ from that of services. It is important to know that prior to now, businesses used to be concerned about their place of incorporation, right? Because physical presence was a necessity for business transaction to occur. So it used to matter where is the entity incorporated. But in the days that we are in now, where someone could basically sit in Germany and conclude a transaction that would benefit a Nigerian resident, the emphasis on physical presence has been expanded to accommodate something else called economic presence. So in the matter of determining whether or not income tax is liable, something profound, a profound concept becomes necessary, which is the concept of significant economic presence. Remember what I said? Fiscal presence was the order of the day at some point, but in the days that we are now, fiscal presence has now been expanded, modified, adjusted in considerations relating to tax matters to also include economic presence. So we are no longer looking at the fact that you were in the country or you weren't alone. We are also looking at how do we measure the extent of your economic presence. So if we adjudge your economic presence as being significant enough, which is why we have the order, significant economic presence order, right, then such an entity may become liable to income tax in Nigeria. Section 17 places emphasis on as a place. Does the entity has a place in Nigeria through which it conducts business? Remember that that's where we were coming from fiscal presence. Does it operate through a person in Nigeria authorized to conduct business on its behalf? Before the new tax law, these conditions used to be framed under Section 13 of the Companies Income Tax Act. So if you are looking at operations, prior to 1st of January 2026, you would have to be focusing on that. Does it maintain stock of goods, in Nigeria, the entity? Does it execute Nigerian construction, installation, assembly, or commissioning of projects? Or does it provide services in Nigeria through employees, agents, or subcontractors? Now, the reason for all of this is that all of these checks is that any of these things could create something that's a concept that is called permanent establishment or fixed base for that entity in Nigeria. Where that happens, then there is a connection for that entity to become liable to income tax in Nigeria. Remember what I said about the concept of significant economic presence, placing emphasis not just on the fiscal presence, but also on the economic presence. How significant is the economic presence of that entity? The order specifies what should be measured by threshold, the other things, other conditions that should also be checked for digital services and the likes of it. Like I said, this conversation is a bit broadened. We would draw the curtain here with respect to income tax, and then we will look at the other possible taxes that a foreign vendor may be exposed to within the Nigerian market in the days ahead. Till I come your way again, keep subscribing, keep sharing, keep liking, keep engaging. Ensure that information as important as this reaches everyone that you believe will benefit from it. Thank you for always following, and thank you for always watching. I will definitely come your way again. I remain Oladejo Adeyemi, your foremost business coach, who designates his time to reading the tax law so that you do not have to spend as much time doing the same. Bye for now.